Today's Wednesday, 21st of August. Looking at Bitcoin, and what are we seeing? I'm going to give you my thoughts. Actually work through some of it so you can understand what the process is. It'll be a good tutorial. And what we look for trades. There's a few opportunities. We call this trade to short, so it was nice. But anyway, let's talk about the chart. Let's break it down bit by bit, stage by stage. This is a 30-minute chart. I'm just going to focus on this level. I'm not going to try to predict anything big. I'm just going to look for this small time range and what options there are. Let's start with formations or patterns. That's a straight line. It's valid because we have our points of reference, 1 touch, 2 touches, 3 touches. So that's valid as a line. We can also imagine, give or take, that seems to be a line as well. And you can see why we picked those lines. Well, it's just point of reference. It's not going to impact our strategy, but it looks like a triangle, doesn't it? So we're just going to cover patterns for now, and then we'll look for our other methodology coming into place. So what we have is a channel of some sort. So if we push this line through, let's just do this for a sec. Now let's just make this accurate. That's a channel. The top really helps us out, give or take. The bottom, we can use that wick. I'm just looking for the middle. The middle makes sense if you look at it. Support, support, resistance, support. So this middle line is made a difference. So as soon as we regain that middle channel, up it goes. That's when it becomes bullish. The back test was there as well, ever so slightly. You break above it, back test, and then up it goes. The other aspect is a different direction. So we have this channel that's going sideways, and we're looking for the dips. We can put our Fibonacci onto this channel. Where are we? We can grab this level and put Fibonacci into it. And you can see the 618, the orange section, is a level of support. And we've had this strong dip. I don't think we'll have another stronger dip, but never know. That becomes pretty prevalent. That's a golden ratio. So if price was to come, if we were to break down, this will be a good level of interest based on the channel. Not to say it's going to make any difference, because we could probably come down lower and then go up. Now, when we look at this channel and look at liquidity, it's going to start making a difference to us. So let's put our liquidity into this channel. Where do we have liquidity? From this point below is all liquidity, all the way down. So that's a big level of liquidity because we have these points. That's lows, 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 lows. So all these higher lows, there's all these bulls coming in, buying the dip. So it makes sense that we can take that one out, hits the golden ratio, and we've taken a few of these guys out, and then price could keep going up. We can get pushed further down. We take that liquidity out, and we can target these ones. So that channel makes sense. The other channel that we had, let's see how we go, from there to there and up. It was one of the reasons why we found that this was going to be a shorting position. Let's have a look. Let's make it make sense. So there you go. We went above, but we found the top of this channel to be resistance, and the moving average also perfect position of a lot of confluence with the trend lines or channels, and therefore we get a push down. So you can see how price operates in that aspect. We got potential. If this channel is valid, you can see these levels of points. So it wouldn't surprise me that we come down and we get this Fibonacci along with the channel, bottom of the channel, and then continue on. And then you can see this triangle playing its role ever so slightly. And now we're in the triangle squeeze. You can see that. Which way is it going to go? So we have models. We've got 3 models. There's a few more. But what are the common models for triangles and what could take place? So keep that in mind with the triangles. Let's just bring those models out and go through them one by one. Before we proceed to the triangle scenarios, I just want to do this as well. So let's just go for the VWAP is right on the 0.236 trend line, Fibonacci level. And let's do the VWAP from the bottom. And that's acting as support over here. So there's a bit of a squeeze. It's not going to really help us there. Just confirm that this level is important. So we can get rid of the bottom one. Now we've mapped out our liquidity levels. So there's areas of what we anticipate to be stop losses for the longs, stop losses over there. So if we're in this triangle, and if price seems to be a grinding, like a bear flag, I suspect that it's going to fall. You might find support off this middle of the channel. Wouldn't surprise me to grab that, take out these liquidity spots. So further down, so hitting that 0.382 makes sense that that's going to be a strong level. This pocket will be a strong level for support, and then off we go. So that is one level of my area of interest, 57 and a bit. Now we're going to look for other confluences, and let's talk about the triangle scenario, how this works. When you look at triangles, you got to think of liquidity as well. So we have three models here. Let's bring them out. Scenario one is very common. Here we go. Scenario one, where if you look at this triangle, price comes up, finds a base, and then ranges for continuation pattern. We have that. So price comes, finds a base, and then we have this motion, and we can potentially go straight up. Simple, a continuation pattern. So we have this continuation pattern, and off it goes. So that's one typical standard. But for the market makers, they don't want to make it too easy for us. And so you've got to be aware of the second model. The second model is this, where it goes for the liquidity underneath the longs. And that's where it comes down, fake out, and then up it goes. So in our case, if it comes down to here, it's still within the scenario one and then goes up. However, they can play the game and take out this liquidity level. And we've got this channel, bottom of the channel support and the Fibonacci, and then we go up in a strong move and taking out all the liquidity above. And what happens is as price goes up, all the shorts get liquidated and they buy back, and that facilitates the upward pressure. And then that comes, they close those, upward pressure, close, upward pressure. And then we look for this top of level where there's a lot of liquidity in this area as well. And we've taken those areas out. So psychologically wise, that's the market makers, that's what they do. So a fake out to the bottom is my second choice, and I think that is valid. And ideally, you want to see it come down with a strong sell, strong wick, and then you want to see it regain this level. So I'll be buying the dip if it comes down here. It's got a lot of liquidity, and it just goes up. And what you have now is your macro W formation. That's one level. This is a reversal structure, guys. This is a bit too deep for my liking, but it wouldn't surprise me to buy that. And then, so we've got the double. So when we have a W formation like that, that is a reversal structure. That is the ideal breakout point. If you want to play conservative, you could do it this way. Conservative wise, where is it? What can we have? From here to there. It's going to take out the liquidity. It wouldn't surprise me though that this we come back in from here, taking out the liquidity. It just depends how it comes. If it comes with like a steamroller, I think it will just blast through it. And if it blasts through it, then there's a lot of areas where all the shorts have come in. They've all come in here, so each one will help perpetuate the move to the upside in a strong way. So I'll be looking to, hopefully it does what I think it does. The worst case scenario, it just keeps dropping, and that is a macro 1, 2, and further down, and pretty much a bear market, much more deeper pullback. So that scenario does exist. I'm not for it. We're looking. So I believe with the ETF scenario and the mass printing and the elections, we have a bullish scenario irrespective. I have another chart that's for members only that shows timelines, Fibonacci time. It really lines up well. So back to this scenario. That's scenario 2. We'll talk about scenario 3. Scenario 3 is a bit more complex. So scenario 3 is we hit the highs first and then hit the lows and back up. So I don't expect much highs to go. So if this goes higher, they can manipulate it. So if this comes down here, hits that top, they just push it up, take out the liquidity all along here, and maybe that one there, and then expect a push down and take out these guys and then up. So this is all about liquidity. Taking out the tops, then the lows, and then back up. So these are the things that I'm looking at. Short-term wise, small time wise, what trades are there within this framework? So let's pull out our levels. Let's hide these guys, the scenarios. We have our levels with Fibonacci. And let's just talk about the Elliott wave count before we continue on. So the bullish scenario of Elliott wave count is pretty much this. This is a wave 1 and a wave 2, wherever it is. And then we go wave 3, 4, 5. I have not, if this continues on, I have 95k. And I'm not going to go through that. If it goes this ABC or 1, 2, 3, 4, 5 move, pretty much. So here we're looking at price ranging for a while. As you can see, it looks like a flat correction of some sort. So it could be a running flat, an extended flat. We don't know. This level was expected. If you want to know, look at our previous videos. We cover this level to buy. And yeah, so on macro, it was expected to come down and take out previous liquidities. And yeah, there's a whole bunch of things. Like for instance, here, if this was a perfect scenario where you get your 1, your 2, was it 3, 4, 5, and you have this broadening head and shoulders, broadening structure, that is pretty much a reversal. So even that you can understand. It's not the most common, but that makes sense. It's a broadening, expanding. Instead of diagonal contracting, this is expanding, and that's what's taken place. And you can see how anticipating certain structures, certain potential early wave patterns, you know what you're doing. Here is same. This is a flat. Need to know your early wave count. This is the scenario that I'm depending on. Either a pullback to the 618 or the 0.5 is in our criteria for a wave 1 and 2. The fact that this is going sideways, which is very good for a big bull market, because what happens with this type of wave count, if it's a 1, 2, 3, 4, 5, if you have this type of sideways price action, then the wave 2 to 3 is usually a very strong impulsive wave. So this is going to be very good if it works out. I'll be laughing, but hopefully it becomes a real bullish market and it just goes, because this is going to be wave 2. And if it comes down to this level, guys, take your chances, because this risk to reward ratio is pretty good. and you will see a lot to go further up. That is my belief that we are in a bullish cycle. This is a corrective wave. We are doing the wave 1 and 2, and let's have a look at on that 3-day chart. Let's see how that looks. Here we go. So this moving average is relatively good. It sort of plays a resistance, and once we regain it, it becomes bullish. Similar here, flat. We had a bit of a fake out there. Once it regains the moving average, up it goes. So we have our early wave count. This was actually a 1.618 level, and that's why it's range. We have this formation. That is a bullish formation. And so if we have our 1, 2, 3, 4, 5 count, then we have this additional XY. Okay, so from our Fibonacci perspective, let's look at our early wave count. Let's see how this works. If our memory serves me right, the golden ratio 1.618 was perfect there. So if this is a wave 5 count, but wave 1, then we've got wave 2. You can see how Fibonacci 1 was perfectly there, pulled it back, 1.618 right here. Let's see what it looks like. So that is our sideways price action in the weekly. And in my opinion, yes, we can go that last dip, like I said, we might get the last dip and then up. And that correlates with what we were saying before here. So if we look at it on the 4-hour, this level here actually aligns with the weekly. Let's bring out our other chart, other levels. Let's just move these things across. Just you'll see what I mean when I get rid of it. We have our levels. We have a TPO, value area low, is perfectly there. So if we hit the bottom and regain this value area low, that's a trade. So if we come down and you're not sure and it keeps coming down, you can be conservative until it gets above this. Don't go long. You can probably take that. If you catch the falling knife, that would be a good move. This will be resistance initially, but if it breaks above it, that's your signal to go long. And then you've got all these other levels of resistance. So that's one trade strategy. Now let's look at our other levels. We've got the weekly and weekly and dailies. And by looking at this, you'll see that they have a lot of confluence with our levels. Here you can see we have value area low, daily, and the weekly as a strong level. So it wouldn't surprise me that we get to this level here. I haven't even added the moving averages, so I'm looking for that. A 1, 2 move, and bring that down to the body. You can see where our 0.618 is, which could be taking out the liquidity in this area as well. So we see our Fibonacci supporting it. Here is a strong band of support. So this is going to be a strong support. If it gets past that and then regains this level, is when I look at for a long. And here are our levels of resistance. We've got the 0.38, 0.382. Depending how it responds, we can take profit here, and it might just consolidate under resistance and then break up or reverse back down. Really depends on the response, and that's why you just can't do things without planning. You need to plan it and wait for those levels of interest. And here's our next level of interest. This is a strong support level. As you can see, we've got the daily and the weekly and the Fibonacci. So this price might not even get down, for all we know. It might just do that. At the moment, I've got a little long trade from here because we on the 15-minute, it looks like it's a good setup. High risk. It's only really looking at the scalp, and that's a triangle type of thing. And I expect it to come down for this level of support and then back up. We might go back up to this point and then come back down, and then we have our A, B, and C coming down. So that's what we're looking at. We have our A, B, C up. We've got our A, B, C down. 1, 2, 3 up, and 1, 2, 3 down. And that's where we might get that or that. and we already discussed that. So those are my thoughts. Hopefully this helps you. Looking for these trades, but there's nothing much right now.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.